Hey, what's up, guys? John here with three of the most powerful men in America are doing right now says everything about the future of this great country. Jerome Powell, head of the Fed. Jamie Dimon, head of the biggest bank in America, JP Chase. Then you have Sam Altman, who just requested between $5 and $7 trillion in funding.
Sam Altman, the face of the global AI revolution.
Up to $7 trillion is how much OpenAI boss Sam Altman may be trying to raise.
About 18% of the U.S. national debt, and he will probably get it. This man will control the lives of billions of people over the coming decade. And the amount of influence that all three of these men have together and collectively says everything. Because there's no way they're wrong. Jamie Dimon issuing a massive bank expansion after he just said we're walking into the biggest financial crisis that we've ever seen. And he's saying that a lot of these regional banks are in really big trouble. Jerome Powell said in July of 2022 that he will only cut rates if unemployment numbers go up and inflation starts to really come closer to 2%. Well, they just reported a couple hours ago, U.S. inflation rose hotter than expected, 3.1% in January, dimming hopes for Fed rate cuts.
We've got some breaking inflation data.
Inflation came in up 0.3% for the month of January, 3.1% year over year.
Meaning no rate cut likely coming in March. Instead, we'll probably see a 25 basis point increase. Then, you start looking at this. Inflation, consumer prices rose 3.1% in January, defying forecasts for a faster slowdown. A week ago, they were saying 180,000 jobs was their forecast. They came to 353,000. They were off 100%. You start to look at all of this, it's going to mean a big change coming for America. And what I think is probably going to be the biggest rug pull on the middle class that we've ever seen. Think about how many millions of people bought the rumor, marry the house, date the rate. How many people got a home equity line of credit? How many people need to refinance, hoping these rates are going to come down? It's not going to happen. It's not going to happen anytime soon. And that's going to present an opportunity for a big investor to step in. So whether you have, 10 grand or 20 grand, whether you're a small business owner, maybe you're somebody with just a big ambition, next couple of years will be more important than ever before. I'm going to break this down and give you the facts, show you exactly what's happening. Please hit the like button, YouTube will share the content, educate more people about what's going on in America. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video and schedule a free strategy session for tomorrow, for Wednesday. Take a look at this. So, Jerome Powell, pivot is a pretty big gamble. Then, no Fed pivot in sight, as Powell addresses rate cut in 60 minutes, right? That came out about a week ago, right on the 5th. And then after that, inflation, shot up. Then, Jamie Dimon came out yesterday saying, Jamie Dimon believes U.S. debt is the most predictable crisis in history, and experts say it could cost Americans their homes, spending power, and national security. This is coming from not some tinfoil hat guy or girl. It's coming from the CEO of the biggest bank in the country. This very CEO is expanding, picking up 500 new branches, renovating 1,700 locations, and hiring 3,500 employees at a period when all of his competitors collectively fired 60,000 employees over the last 12 months. Why? Well, because if you look at this, small banks defined as those outside of the top 25% in assets. This is about the banking crisis. Here's the domino that could kickstart another banking crisis. Holds only about 36% of loans, but 70% of commercial real estate loans, according to the Fed. Think about that. They're holding 70% of commercial real estate loans. Most of those loans are underwater, and most of those loans have to get refinanced over the next couple of years. Meaning, this is going to allow JP Chase a legal ability to go over there and start to acquire market share. Otherwise, they can't just start acquiring banks, in the open market. They can only acquire after 10% market share if the bank is in financial distress. And so they're getting ready to start to acquire more and more and more banks. That's what's about to happen here. But you think about this, the amount of crisis that's already, unfolding in America in terms of affordability, the amount of inflation already in this country. Just an hour ago, they passed the new bill, almost $100 billion for other countries. $100 billion. They're talking now about, universal basic income pilot programs. There's hundreds of these programs across cities all over the country. Hundreds. In 2021, there was only 11. So you look at the direction that we're headed. Sam Altman, for example, meet the woman. This is Yahoo News, right? Meet the woman running Sam Altman's universal basic income study to find out how cash payments can mitigate AI-related job losses. And, she says the organization has remained quiet throughout its research. Rhodes has rarely done an interview. Altman is still the chair of open research, but has given us total independence. Altman's interest in universal basic income is related to his work as CEO of OpenAI. If AI eliminates jobs, could guaranteed cash help workers who lose their income? Altman believes AI could generate enough wealth to pay every U.S. adult $13,500 a year. He was definitely thinking about the future of labor market changes. $13,500 a year. So for people right now that are already, kind of struggling, imagine if everyone else received $13,500 per year, what that would likely do to the cost of living, to inflation, food cost. Everything would likely go up because there's going to be more cash chasing fewer goods and services and food, and everything's just going to likely continue to rise. Everything. I mean, according to MIT and Boston University, AI is expected to replace as many as 2 million manufacturing jobs just by next year. Our evidence shows that robots increase productivity. It's not just, this. I saw this and I thought this is very fascinating. 61,600 likes, right? This video, what a business owner in Pasadena, a fast food chain, he says, we can't afford, labor costs now with the increased minimum wage. We can't afford it, so we're bringing in automations. We're automating everything, the entire, production line on burgers, on fries, chicken fingers, you name it. Everything is going to be automated, and he's going to make more money. He's going to be able to stay in business. So there's no denying this. Look at this.
The robots have arrived, at least in Pasadena, California. That's where the world's first ever fully autonomous AI-powered restaurant has opened, complete with burger flipping bots.
Yeah, this is going to be happening all over the country. This will be happening all over the country. But you have to look at everything collectively. You look at really connect the dots here. You have record high consumer debt, record high credit card debt, and then you have, Biden administration came out today saying new student loan repayment plan could make it easier for borrowers to become homeowners. And in this new repayment program, traditionally when you apply for a home loan, they're looking at your debt to income. They're going to look at what your income will be after your expenses and then be able to qualify you based on this. Well, before they were using your student loans, the monthly payments on that student loan, and either approving you or denying you based on those numbers. But now under this new program, that's not going to be the case at all. They're saying, as little as, only 5%, like they're talking about reducing this balance closer to zero so people can get approved and qualify for these loans. So you think about this, the debt bubble is going to keep growing and growing and growing. And so imagine if we start walking into an environment with, universal basic income, what would that do? Inflation would rise, and the people that are barely making it, that are buying these homes, how are they going to be able to hold on, especially when you look at what's happening with property insurance and property taxes? Everything's going up. So there's going to be a lot of traps set in the economy for people. You have to be really strategic and forward thinking about all of these things before you make a big move. And here's another one. Biden administration trying to curb gig work. This would likely come into effect March 11th. So, basically not even a month from now. At the same time, consumers have $1.1 trillion in debt, $1.13 trillion. Late loan payments rampant. New government report shows household debt levels at record high. So you start to connect the dots here, and you can see one thing really, really clearly, that people are going to start defaulting on bills at an alarming rate. Like, for example, the average interest rate per Forbes is 27.91%. So if you owe $10,000 at that 27.91%, it would take $18,000 in just interest payments, a decade to pay it off. The difference, though, which is shocking, is if you go from a $250 payment to $240, you would think maybe that it's just going to be an extra $500, or no, it goes from $18,000 to $26,000, an extra $7,000 in overall interest due just over that $10 discrepancy. And so right now, a lot of Americans have this balance, and they're saying, you know what, because the average credit card balance is $6,800. And so the average American has this balance, and they're just like, you know what, I'll make the minimum payment. That is the worst thing that anyone can do in an inflationary environment. Imagine you buy something. For example, say you bought this drink, right? You buy this drink, and it's called $3, and you put it on a credit card at 27%. You end up paying $6-7 up for that same drink, right? It doesn't make any logical sense, but a lot of Americans feel like they have no option. They have no choice. There still are options, because what I believe is going to happen in 2024 is I believe they're going to keep kicking the can down the road. They're going to be pretty quiet about, a lot of the pain that a lot of Americans are going to be going through. They're going to pretend like we've hit a soft landing, everything's okay, and nothing major is probably going to happen. but there still likely will be access to credit. So a lot of these 0% interest balance transfer credit cards will still likely be available. A lot of opportunities for funding will likely still be available. You just want to put yourself in the best position possible, knowing that the world is likely going to get a lot more expensive, a lot more curveballs are going to be coming for Americans, and people need to play defense a lot more and be really cautious. Like, they really need to be cautious. Why did my interest rate go up on my credit card? You start to look at like some of these changes that are happening. It's just so shocking. Like, what is a junk fee? The junk fee, when they're trying to get rid of these junk fees and they're going to start going after these lenders, this probably won't happen overnight. But they want to remove late fees on credit cards, at least reduce them almost upwards of 75%. And overdraft fees on bank accounts. All of these, cash points, all of these, incentives that these companies have to issue lines of credit, they're going to start to pull them back slowly but surely. So I would imagine probably sometime next year, things are going to start to hit the fan. We're probably going to have a quiet year this year. Relatively speaking, there'll probably be one big event after the next over the year. But quiet in terms of, I think people are going to still be able to get access to funding. I think people are still going to be able to, invest and do things really, really aggressively and ambitiously. But position yourself for this, because we are working into a world with a universal basic income, no doubt about it. We're walking into a world with massive job losses incoming and a lot of booby traps set inside of this economy. So if you are thinking about buying a house, I would recommend buying something that's of a value add to where you can, ideally, duplex, triplex, fourplex, something where you have some upside. You can bring your life expenses close to zero if you have to. If you lose your job, you can, bring in a roommate. You have 2 or 3 other renters that are paying rent. You have options. The future is going to be about options, having access to liquidity, and being able to go out there and pivot and move. Because most people simply won't be able to. Most people are going to be at the brink, and they're not going to be able to make it as inflation gets a lot worse. And they're going to start demanding government assistance. And at the end of the day, you start to kind of connect the dots of what they said here. They said right here, how will they combat inequality? Governments can reduce inequality through tax relief, income support and transfers, government programs like welfare, free healthcare, food stamps. So this is coming. I mean, this is without doubt coming to America. What do you think about it? What do you think is the best game plan and strategy if you are a renter right now? Is it to buy a fourplex to reduce your consumer debt expenses close to zero, to save up money, to get your credit score 780 and above, to put yourself in a really, really strong position for funding and try to isolate yourself and insulate yourself from the chaos? I think so. Drop below. Let's have a conversation. If you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, click the link in the description. Just schedule for tomorrow, and catch you next video.